Tesla has just released their earnings for Q1 of 2024, and the market has liked what they have seen, surprisingly. They did not beat earnings estimates, but despite this, they're up 12% today to $162 a share. What we're going to be doing today is going through these earnings and then taking it to my automated stock evaluation spreadsheet to see if Tesla is a buy or a sell using discounted free cash flow model, comparable company model, and finally the Ben Graham formula for intrinsic value. So let's get straight into these numbers here. This is 2024 Q1, and we have revenue is down 13%, 17.3 billion. These are the trailing 4 quarters before that. 19 billion, 21 billion, 19 billion, 21 billion, and this is 17. This is on the automotive revenue. Total revenue 21.3. Once again, this is the lowest number in the last year, down 9%. If we have a look at profit, yes, they are still a profitable company, but it is down to 1.1 billion. This is the lowest number it's been. They were very profitable in Q4 of 2023, 7.9, but that is down. Then we look at free cash flow, and actually it is a negative, down 600%. This is because free cash flow is cash from operating activities minus capital expenditures, 242 minus 2.7 billion. This gives us minus $2.5 billion. So yes, they did have some things. They've said that the growth in other part of the business, that's not really one to see. Higher FSD revenue recognition in year to year, but the prices have been going down. I have seen recently that Tesla were dropping about $2,000 off all their models, and we can see here that things have gone not as well as expected, but I think the market was expecting things to be a lot worse, which is why we can see that they're up almost 12%. If we just compare this versus the market over the last 5 years, if we compare to SPY, and we go on the year to date, over the last year, Tesla is even, market is up 22%. If we go up the last 5 years, Tesla is still winning, up 1,000% compared to the market's 72. But if we go to the point back in its all-time highs at the back end of 2021, it was up almost 2,500% and has dropped quite a bit since then. I believe it is down almost 50% from its all-time highs. 52%. So let's go have a look at my automated stock evaluation spreadsheet. First, what we do is we will type in the ticker TSLA, and what this will do is it will load up all the company financial data. Now, the problem is even sort of Yahoo Finance and things, they do not have everything completely up to date because you don't have the latest quarter. So what I can do here is I can actually override these numbers. If I put the latest revenue, which was 21,301, net income of 1,129, and cash from operating activities minus capital expenditures 227, and then that'll give us that, and you can see that the value is actually updated there. So now we can see that in the trailing 12 months, including this quarter, things are going down. So let's go have a look at the revenue. It is down from 2023 in the trailing 12 months, 94.75 billion compared to 96. Yes, it is still was growing up in that point, but now revenue is sort of flat and in cases negative. So this will be very telling for Tesla over the next few years. Net income, a similar story as well. Trailing 12 months, including this quarter's earnings, down to 13.6 billion, down from 15, but still higher. But once again, they had quite rapid growth, not profitable for many years, very rapid profits, and now it is stagnating. Shares outstanding. There's several splits in here, but basically you can see that they actually are issuing slightly more shares. The sheet doesn't handle the splitting of shares quite well, but you can see that they sort of did issue slightly more shares, which is not what we want to see. Assets versus liabilities. Assets are higher than liabilities, but you want this ratio obviously higher in terms of your more assets and liabilities. And finally, free cash flow. Well, we saw, yes, 1.39 billion. This is the lowest it's been since 2019. So once again, this is not going in the right direction. So I will hazard a guess. If I was to look at my discounted free cash flow model, let me just pluck in the averages here. I would say this is not a buy on discounted free cash flow model. And yes, $7 stock. This is because obviously the most recent valuation. So let's have a look at these numbers and see what we see. In terms of revenue growth rate, I mean, what are analysts saying over the next 5 years that they're expecting Tesla to do? I imagine they're still quite bullish. Yep, next 5 years, around about 50%. Past 5 years, 70%. So let's see. So let's go with 15% on revenue. In fact, that is sort of the averages. Net income margins. Let's be a bit more bullish here. They did do 14% there. And then average free cash flow rate, once again, 18, 19%. So discounted free cash flow is not going to like this stock at all. You can see $11 a share. Discounted free cash flow does not like Tesla. But let's have a look at comparable companies model. What this is a way of valuing companies based looking at their competitors in the market. And we use a series of metrics. Things that we're looking at here is revenue growth, EBITDA, profit margin, price to book, price to sales, PEG, which is price to earnings growth, EV to revenue, EV to EBITDA, and PE ratio. So I'll quickly add in GM and Ford, and then I'll also add Toyota in briefly. Unfortunately, because Toyota is a Japanese company, all of the values are in yen. The website where I get all my data from does not handle that too well. What I'll do in the future is I'll try and kind of combine that so it handles it based on currency, because it provides the revenue in yen, as you're about to see. 43713 billion. Let's just quickly see what that is roughly in dollars. 4371 is it 90 yen. Yen in USD is 280 billion in revenue. So let's just have a quick look at these numbers here. So revenue, Tesla is not the highest, about 100 billion. Ford and GM and Toyota are higher. Toyota being 280 billion compared to Ford and GM around about 170. Obviously, 5-year growth rate of revenue, Tesla still is growing. But interesting enough, Toyota is actually the second highest. EBITDA, which is let me just quickly open up my currency converter on Google just before I continue. Yes, but what we want to see here is EV to EBITDA is earnings before interest, taxes, depreciation, and amortization. And once again, for Toyota, 6546 is $42 billion. So EBITDA is about the same for all the companies apart from Toyota, which is a lot higher. And then net income as well, 4499 is $29 billion. So profit margins, 14%, 10%, 6%. Tesla is a lot more profitable than GM and Ford, but this number has been going down. But Toyota is looking pretty good as well. Now, this is the point where I'll stop because these metrics here, it doesn't do very well. So I'll just go to the other sheet. And if we look here, PEG ratio, this was Peter Lynch's. Basically, 1 is fairly valued, under that is undervalued, over that is overvalued. And you can see, according to this, only Ford is undervalued. EV to revenue, we want low multiples here, and Tesla has higher multiples than all of them. So based on comparing between sort of more traditional, air quotes, car companies, Tesla is about overvalued by, it seems about 100%, anywhere from $72 to $81 a share. And finally, we'll look at the Ben Graham formula for intrinsic value. This is looking at the P of a no-growth company, AAA bonds and corporate bonds. And let me just double check that this number is still correct here. Yep, 5% on a bond. And analyst growth rates, I think we saw was about, was it 15%? Yep, 15%. So it's not a buy according to this either. Currently rated about an $83 stock. So interesting enough, actually, comparable companies, and Graham's model has it about the same value, which is anywhere between $60 and $80. And discounted free cash flow does not like the stock at all. Alright guys, thanks for watching. If you're still watching, please check out my Patreon if you want to get the access to the sheet. Subscribe if you're not already, give it a like, and I'll be bringing videos out on Meta and other companies that have their earnings soon. So thank you, and I'll catch you guys next time.